August 8th, 2019. So in this video, I'm going to go over a full trading day that I had on August 8th, 2019. Now, before I dive into the trading day, what I want to break down is the three components that we have to kind of understand before we go into the trading day. Now, before we ever look into the trading day, the first thing that we want to start out with is market direction. We always want to look at the bigger picture, and when we look at the bigger picture, we want to see what's happening. So we start off by looking at market direction. So every morning, whenever I'm ready to trade, first thing I start off with once again is the market direction. Next, after I understand what's going on with the market, is there any noise, good noise, bad noise, what's going on overall at the bigger picture, I then jump on to my pre-market movers or any catalyst that's presented. Is there earnings? Is there some good or bad news for any particular stock that I should focus on? After that, I then build my watch list and I create a game plan, right? And I'm gonna walk you through that right now. So on August 8th, first step that I did was I looked at the market direction. Now, when I looked at the market direction, what did I look for? I looked at the big picture. Now, when I'm looking at the big picture, I'm starting off by looking at SPY, right? SPY is giving me a clear indication on what's happening. Now, obviously, we're not just going to zoom into this day and see what's happening here. We want to understand the big picture. We want to understand what has been happening and is anything new happening to maybe reverse that direction. So, for example, let's say we look at SPY right now, okay? Today is August 8th. This is what we see with SPY. We see that SPY has hit a high of $300, and in the past 2 weeks, SPY has been dumping. Now, since it has been dumping, we want to understand why has it been dumping, right? That's number one. And then number two, we want to understand what's happening here now. Because now this goes back to understanding price action. Understanding price action, we see that SPY, the overall market, hit an all-time high, and now it's selling off. As it's selling off, this could just be an area where it's taking a break, right? It could just be taking a break. So let's say we have not traded for 2 weeks, 3 weeks. We're looking at the market the first time. These are things we want to understand. These are things we need to know. Now, obviously, if you have been trading from this time till now, and if you're keeping up with the market, you kind of know what's going on. You know why the market has been down. You know why the market has been selling off. But if you don't know, it's your job to understand. It's your job to know, hey, what happened here? Why did the market sell off? What's going on here? Is the market now taking a break? If it's taking a break, that means this may be a continuation play, right? So looking at this, that's where the big picture gives us a solid understanding. Now, this is a daily chart, and this right here is an intraday chart. Looking at the intraday chart in pre-market, we can see what's going on. SPY is trying to break this major critical level. Pre-market, it is up. That's a good sign. So now we want to understand the news component. Why is it holding? Why has it been selling off? What's going on? So it's 9 a.m. Eastern Standard Time, pre-market time. Markets are looking strong, facing resistance pre-market. So during the pre-market area, the markets are so far looking strong, right? They're facing our critical resistance point. Now, just because it's facing resistance point does not mean it's going to go up. Just because it's up pre-market does not mean it's going to go up either. Once again, there's a lot of different things can happen. A lot of different things that can happen could be this could open up and then start dumping and continue going down. Now, if SPY trades in between this range, I'm not really a fan of looking at any sort of dead plays or any sort of plays that are within a range, because that's just showing the market is kind of flat. But now if SPY can break out of this range, go on the upside or the downside, that would give me a lot of confidence. That would give me a lot of confidence, showcasing that there's a high probability for a continuation move on the downside or maybe the upside. But that's where catalyst kicks in, okay? Now the catalyst that's kicking in is right here. So China tariffs are delayed and tariffs on Mexico are delayed as well. This is causing a rally in the market. So right here, what's happening is the tariffs on China are being delayed. So the reason of this drop was because we were going to place higher tariffs on China. There was also a lot of noise going on with the Feds. So that was causing a major sell-off. It first initiated with the Feds stating that, hey, we're possibly not going to cut more interest rates. We're going to stay flat. And then it came with Trump showcasing that, hey, we are going to place tariffs on China and we're going to be aggressive. That set of news caused a lot of fear in the market and a huge sell-off. Now, the new news that's coming out is the China tariffs are now delayed, okay? And tariffs on Mexico are also delayed. So right now, this is a good catalyst. This is good news. Now, just because we have good news, guys, this is another thing I want you to understand, and you guys are going to see this a lot. Just because there's good news does not mean that the market is going to go up. Sometimes you're going to see there's good news, market opens up strong a little bit, and then boom, starts reversing, right? So you kind of want to keep an open mind, right? You don't want to be stuck on one side. You don't want to say, oh, there's great news, the market is going to go up 100%. No, it's not going to work like that. Even with stocks, sometimes this could be good news, stock still goes down. There could be bad news, stock still holds or maybe goes up a little bit, right? So it's very hard to say like, oh, market is going to go up. Yes, the news is good. Yes, with the news, we are anticipating that the market is going to go up, but you have to keep that little open area to kind of keep yourself in a solid position to know that the market may possibly go down, okay? So that's what we have pre-market. Now, once again, this is VIX. So to show you guys what has been happening lately, the past week or two, VIX has been at an extreme level. Market has been falling. Obviously, VIX is representing the fear factor. Fear factor of the market has been at a very high point, and recently it's going down. But right now it's still at a high level. It's showcasing there's a lot of fear in the market. There's a lot of uncertainty, and you can also see the overall market. It's being showcased right there. Now, once this is done, once we look at the big picture, the next thing I like to do is me personally, the way I trade, I go through my same watch list. I look at the same stocks. Sometimes there's stocks that I'm playing like this earnings season. I'm looking at a lot of stocks with earnings. Sometimes there's a big catalyst play, maybe be it with BA, maybe Apple, maybe an upgrade, downgrade. Or sometimes when there's nothing going on, I just look at the same stocks over and over again. So now in this situation, this is my focus list. So my focus list, I have Apple, I have Roku, I have Facebook, I have Netflix. Now, when I have my focus list, sometimes I have reasons. Maybe there's a catalyst, right? Maybe sometimes there's not a catalyst and there's just, it's breaking a critical level, right? So if you look at all these stocks, you can see Apple is filling this small gap, with the tariffs being delayed. Recently, with the tariffs being announced, pushed Apple down. Tariffs being delayed gives Apple probably a solid move today, and you can see pre-market is trading between this range. So Apple is on my watch list. Facebook had earnings, solid earnings, strong rally right into resistance. So I'm gonna watch this on the open too. Roku also had earnings yesterday. Strong move up, broke a critical level, and now it is at a high point. So Roku is also another stock that I am watching. Beyond Roku, I also have Netflix. You can see Netflix is also facing a very critical level. Dumped that level the other day, and now it's rallying right into it. Now, I'm not going to go over every single stock that I had on my focus list, but I'm just going to focus on 4. Now, the idea of this, guys, is as you progress and as you become better and better traders, you start having a bigger focus list, maybe 8 stocks, maybe 12 stocks. Maybe you start setting alerts. But starting out, I don't recommend you to have a large focus list because I want you to really understand and dive into each and every single stock that you are watching. Now, when I do this, I have multiple screens set up, which I will show you in the later parts. And when I have multiple screens set up, the whole idea is I would have, let's say Apple, I would have a 1 and a 5-minute chart of Apple open up. I would have a 1 and a 5-minute chart of Facebook open up. I would have a 1 and 5 of Roku, Netflix, and so on. Now, if one of them does what I'm anticipating for it to do, or it showcases me a potential play, I will then move it onto my main screen and then I will trade it. Now, let's say I only have 4 stocks on my focus list. Does that mean I'm going to trade all 4 of them? Possibly, possibly not. The idea is sometimes you may have 7 or 12 stocks in your focus list, right? They all 7 or 12 might have high probability plays. You want to cut it down. That's number one. Right, you want to try to, like me personally, I like to be at 6 or less. Like I like to be below 6. Sometimes I'll have other stocks. I'm just up there, maybe a critical level, maybe increased volume is kicking in, something new is happening. But I like to keep it less than 6 or at 6 max because I like to keep my focus on maximum of 6 stocks, because if I go to 12, for me personally, it becomes too much. For some people, they're able to do it. I can't. I've realized that about myself, okay? Now, the next thing is, like I said, I have these 4. sometimes when you have four, one of them might showcase a play and you might miss the other two. And if that's how you're trading and if that's how your focus operates, that's okay, right? There's so many times where I would have four stocks on my focus list and all four of them did what I basically anticipated or what I wanted it to do, and I maybe caught one. That's okay, right? The idea of having a focus list is if this doesn't have a play, this may have a play. If this doesn't have a play, then this may have a play. If this doesn't have a play, then this may have a play. Now, the idea is sometimes you may have a focus list of 4 stocks, 6 stocks, 8 stocks, and sometimes none of them may show you a play. And that is okay as well. That's fine. Don't be so focused on having a play every single day, right? Then sometimes your focus list needs to get better. Right now, if that happens here and there, that's fine. But if every single day you build a focus list or you build your day trading list or your daily watch list and there's no potential plays, either you're not executing or either you're not building your list out the proper way. You're not building your agenda out for the day the proper way. And that's something that needs to be worked on. Okay. Now, I'm going to focus primarily on Roku. Okay. So this day I traded Roku and I traded Apple. These are 2 trades I had. Okay. So right now in the pre-market watch list, the game plan I'm going to make is I'm going to make it for Roku. Obviously, I should have one for Roku, Apple, Facebook, and Netflix, which I did. But right now, I'm only going to show you guys Roku, and then I'm going to walk you through that trade. Now, looking at Roku, this is Roku pre-market, okay? 9 a.m. Eastern Standard Time pre-market. We have 30 minutes till the market opens. Stock is up about 20% on 500,000 plus shares. So stock is up nice and strong in the pre-market, right? Yesterday, Roku had earnings. After Roku had earnings, their earnings were very, very strong. The stock is also making all-time highs in the pre-market. And once again, the reason Roku is on my watch list is because they had earnings, they beat earnings, they basically crushed earnings. And let's just say I didn't know Roku had earnings. When I do a pre-market scan, Roku pops up. Roku on the pre-market scan, I see that a stock is up 20% on a lot of volume. And when I see a stock is up 20% on a lot of volume, the first thing I look at is, okay, why is it up? And then when I look at why it's up, I see this. So I'm like, wow, that is amazing. They beat earnings, not just that they beat earnings, they absolutely crushed earnings. Now the question is, what is going to happen on the open? Now, like I mentioned, the mindset I want you guys to get into is not what's going to happen in the open, but I want you to get into a mindset of, if the stock does X, Y, and Z, this is what I'm going to do. If the stock does ABC, this is what I'm going to do. So let's walk through this trade. Let's walk through the game plan first, and then I'm going to jump into the trade. Now, the game plan is basically watch on open and see if buying pressure and volume is still there. Now, I want to see that, a stock that moved up 20%, right? There's still a lot of buying activity going on. There's still a lot of interest going on, right? If that's still there and that's still present, that gives me an idea that this still has a lot of room to run. We also have to keep in mind Roku right now in pre-market is at an all-time high. It has never been around 119. It has never been around this area ever before. So it is at an all-time high. A lot of people are also going to be watching this stock. The question is, will this stock continue and make a new high? Will it go higher? Will it go to 125, 130, 140, and so on? Or will it reverse? Will there be selling pressure? We don't know. But what we can anticipate is because they had strong earnings, right, there is a possibility that this may continue rallying. Okay, so we are waiting on the open to see if there's buying pressure present and if volume is still there. If so, watch for entry above 120 break. So for this, what I'm looking to trade is I'm looking to trade options, right? I'm going to look to trade options, and this is what I actually traded. I'll show you my entries and exits after. I'm looking to trade options. Now, once again, calls and puts. I'm looking to buy calls if it breaks the 120 mark. I'm looking to maybe trade puts. I don't know about puts because I'm not that I don't know about puts. I don't know if I want to buy puts on this particular stock, because even if it breaks 112 and it starts selling off, then maybe I might consider it. But it's just with the earnings they've had, I think for me to really buy puts on this stock right now, I would need a major negative catalyst to come out right before the open or around now till the open, or even when the stock does open. And I don't currently have that right now. I just have good news surrounding it, and I don't know what level I would enter to buy puts or enter to short. So my head right now is more so on the buying side, but that's only if it can break 120. If I see a strong break on 120, if it does not break 120, if the market does not look strong, because I also need the market that's been selling off to look strong too. If the market looks strong with Roku breaking 120, I will be a buyer. But if not, I don't think I'm going to try to play this on the downside, and that's okay. Right, because I don't know where I would get in on the downside. And having that established, guys, before the market opens just gives you a solid game plan, gives you a nice idea of what you are potentially going to do if X, Y, and Z happen. So now if X, Y, and Z does happen, you kind of know what to do. But if X, Y, and Z doesn't happen, now you know not to really focus on this and take your focus and move it over to another stock. So that's the whole idea of having a game plan before the market opens. And every single day before you guys jump into the trading day, give yourself at least an hour or hour and a half before the market opens and prepare everything and walk through your thoughts and accept, like, hey, break on 120, strong buying pressure, and like cement that into your head. Because if it's not cemented into your head, when this does start moving, you start forgetting your whole game plan. So you want to kind of cement that and understand it at a very, very, very deep level. Okay. So now what we're going to do is we're going to go on stock Roku, and I'm going to show you the price action move, what happened that day. And then I'm going to jump into my entries, my exits, and what happened with my trading day and what I did, what I could have done better. Did I make money? Did I lose money? And so on. So let's jump into it right now. All right, guys. So right here, I have stock Roku open. This is a trade I'm going to go through. I traded this stock for the day. I am going to show you my entries, exits afterwards, what I did, what I could have done better, if I lost money, made money. But I'm going to walk you through this play one by one so you guys can have a better understanding. Now, what I usually like to do is before I am looking to trade a stock, if I'm going to trade options, I like to have my active trader section open. So in this stock, I am using the active trader section. So the reason I'm using the active trader section is because I am trading options. Now, even if I'm not trading options, I still like to use the active trader for that stock. So I would click active trader, and then I would then look to trade that exact stock. Now, since I want to trade options, I like to have this prepared. Now, a few things I want you guys to keep in mind is when I go into the trading day, sometimes I know what I'm going to trade, and sometimes I don't know until the stock presents an opportunity. Now, if I do know what I'm going to trade and I have a strong idea, I will then set this up. So let's say I do know I'm going to trade Roku. Roku is that stock that I'm like, hey, it has catalyst, it has a play. Now, if it does X, Y, and Z, I'm going to trade it. So what I like to do is set this up. Now, the way I set it up, as you guys can see, I have it linked to 7. So I'm going to go to trade, and I'm going to go to the 125 calls. Now, the reason I'm playing out of the money is because I have traded Roku multiple times after earnings, and when Roku moves, it really makes major strong moves. I have traded this after earnings multiple times, and most of the time I have done very, very well. And a few times when I played out of the money, this stock has continuously ran over and over and over again. So that's why I'm looking to trade out of the money call options. So I'm going to go here and I'm going to send it to 7. Now, when I send it to 7, what I'm going to have right here is I'm going to have the Roku weekly options for 125 call. So this is just for the $125 calls. That's it. That's what I'm focusing on. Now, some people might play the 120. Some people might play the 122.5. Some people might play something else. I am playing the 125s. The reason I'm playing the 125s, once again, I'm playing out of the money because I kind of think that Roku can make a run till there. And that was my mindset then, right? So my mindset that day was, hey, I think Roku can make a push to 125. If I see a strong open, I think it can go higher, 125, 150, I mean, not 150, 125, 130, because in the past it has showcased very strong continuous runs. That's why I picked 125 out of the money call options. Usually when I play call options or put options, I like to play something that's in the money or at the money because they actually move a lot better than playing out of the money, because playing out of the money is very, very risky. So my risk factor on this trade was a little bit higher, and the reason it was a little bit higher is because I had the confidence in the stock, because I have traded it multiple times on the open and I have done well So my mindset, once again, was I can read this on the open, and I'm probably going to capture it if I see a strong move up, which is why I took on a little bit more risk. Now, let's go through the play. So I'm going to play it. It's 9:29 a.m. We have 10 seconds till the market opens. We have the 5-minute chart, and we have the 1-minute chart, right? So what we're going to do is I'm going to play this, and we are going to watch what happens. Now, like I said, don't trade the first minute, 2 minutes, 3 minutes. Now, that's where I kind of messed up with this stock. I made a lot of mistakes with this trade. When I made this trade this day, there was a lot of mistakes I made, which I'm going to show you. But one thing I did was I traded it right on the open, right? Now, right now, we're in a minute, in 14 seconds. What do you guys see happening? A strong move right into 120. It's breaking the pre-market high. So far, this stock is looking very, very strong right on the open. But one thing that I mentioned a million times is do not trade on the open. And like I said, that's one mistake I made with the stock. And you guys can see what's happening. Now, let's just say you guys want to buy call options, right? And you want to buy the 125 calls. This is showing you the bid. This is showing you the ask. Right now, obviously, there's a huge gap between the bid and ask price, and that's because of how quickly this stock is moving. Now, the level 2 in this stock, the level 2 here is only for this call option, right? That's only for this call option. So what I'm going to do is I'm just going to buy. Now, whenever you guys are buying options, let me pause this. Whenever you guys are buying options or you're flipping premiums, do not buy market. Like if I go on a buy market right now, what I'm going to do is I'm basically paying $232 for a call when the bid's at $113. Typically, if you try to hit the mid price, let's say you hit 160, 170, you'll probably get filled. But using market and getting in at the high and hitting the ask right now, you're just paying a lot of money for absolutely no reason. That's one mistake a lot of people do. But for this example, I'm just going to hit buy market, but I don't recommend you guys hitting buy market when you're trading options. There's not a lot of liquidity. Now, when I hit buy market and I send, I now have 10 contracts at 169. This is not adjusting properly, but let's say it right here. How do I know I have 10 contracts? You guys can see right there, I have 10 contracts. Now, my P&L will not be shown on this. My P&L is shown on the home page, which is kind of good. But now let's keep watching price action. Okay, 1 minute in, we're in the second minute, right? What happened? The first minute, stock went up, got rejected at 121, and now it's pulling back. Now, like I mentioned, the first mistake I made with this particular stock is I traded it on the first minute. This is where I traded it, on this candle. Very terrible entry. I got an extremely terrible entry. And that terrible entry came in from the confidence of trading the stock in the past, and that confidence told me, hey, I'm going to capture it again. So I went in with a fixed mindset, which is never good. Okay. Now, looking at the stock right now, what I want you guys to understand is a good entry point now would maybe be a break above 121, 122, maybe seeing a possible continuation play. That would give us confidence. Now, what I like to see with Roku, and I have seen plays like this with Roku multiple times in the past, is I want to see the tape. I want to see what's going on, what's being printed, right? Now, when I'm watching the tape, I want to see if 120 is a holding, what tends to happen at 120. If I can see a hold at 120 and a continuation at 121, that'll give me a little bit confirmation to maybe add, right? Or maybe take my first entry. Right now, let's see what's happening at the 121s. 121s, let's see how it breaks 121s. Is this a quick flash, or does it actually break through very, very strong? So we're watching the 121s. You guys can see printing a lot of strong 121s. Now, this is going to be a very important lesson for everybody. This is something I want everyone to really, really understand with the stock. I've made a lot of mistakes with this trade, but there were a lot of things I could have done better, which you guys are going to see. Now, see, it breaks 121, and immediately after it breaks, what happens? It gets rejected, right? So far, right here, we know there's a lot of selling pressure, right? We know there's a lot of selling pressure. But we also know around here, there's a lot of buying pressure, right? There's a lot of buying pressure, 119, pre-market high, 119, 120, critical level. You can see 120s keep flashing, 120s showcasing a strong, the bid keeps holding at 120, showcasing that buyers are strong around 120. So we know that there's a lot of selling pressure here. We know there's a lot of buying pressure here, okay? So it's between a range. Now, as traders, we want to see a stock in between a range, and if it can continue break out of that range, that gives us a possible trade, okay? So right now, still trading between a range. Now, obviously, if it breaks this area here, there's no trade. There's not anything we're going to look to kind of take on from here. But you can see, even on the level 2, even on the tape, watch the 120s kick back in. Watch this area right here hold, especially the 50s, the 70s. This area is going to hold pretty well so far. Now, also keep in mind, guys, we're only in 4 minutes, right? We're only in 4 minutes into the market, right? This is still very early. Like a full 5-minute candle has not even closed yet. So we're only in 4 minutes. We're going into our 5th minute now. So this is not anything crazy, right? We can't look at this and say, oh, the play is dead. It's only been 4 minutes going on to 5, right? Continuation play, holding here, resistance here, gets rejected continuously over and over again right here. Now, as a trader, these are things that you have to understand. These are things you have to kind of see. Now, when you guys are trading, obviously you're not just having one stock open. Like, we're not just going to have one stock open in front of us. You're going to have a screen with multiple other stocks open too. And the idea of that is so you can see what's going on. So, for example, if you look right here, I have the overall market, right? I'm looking at ES, I have Trin, I have Tick, I have ADD. There's other things supposed to be set up. I kind of have that messed up right now. But now this is what we care about. Now, 122 is breaking. Now, what happened here is this is giving us confirmation on entry point. This is telling us new 5-minute candle forming, right? You guys can see new 5-minute forming. We're into a strong, going into 122. We want to wait for that close. If we can see that strong close above this area, 122 is holding, a strong close above 122, bids holding, everything looking strong, everything's looking good. We want to get in and we want to take the trade there. We want to see, are buyers strong, are buyers weak, are buyers showing up? And you guys can see the 122s are holding. It went below a little bit. We want to see that hold. We want to see it break. And now let's see however this candle goes. Now, when you guys are trading, waiting for that next candle formation, candle continuation is very important. So this is giving us somewhat of a confirmation. This is showing us that buying pressure is a little bit kicking in. Buyers are stepping in. This looks like a very strong plan. If you guys go back to Roku's earnings, you guys are going to see a lot of different plays. And the Roku examples I went through, this is giving us confirmation. So I'm just going to buy 10 contracts right now. Like I said, I'm just buying market for now. So it goes through. I bought 10 contracts. Okay. Now that's giving me a solid entry point. So right now I have a very, very strong entry point. This is a strong entry point. Now this is not what I did, right? I'm going to show you what I did. I wish this is what I did, but this was not my trade. Like when I went back to it, I'm like, oh, I wish I did this. I messed up. And obviously it's a learning curve. And obviously we're going to keep learning and growing and improving our trades. I traded this very, very bad. The way I'm explaining it now is once again, not how I traded. That's kind of the great way to trade it, but I'll show you with my emotions, with my thought process, with my past experience with the stock, how I actually went about it. Now, what happened is this stock goes up, gets rejected at 123. Now, something interesting about Roku is that Roku a lot of times has a big mess on the open and then continues, right? On the other examples I went over with Roku, you guys probably remember, very similar plays. Opens up a little choppy, a little sideways, and then it continues, right? So this is presenting me the same exact idea that, wow, this is choppy. It breaks the level. It's holding. It's maybe going to continue. And same thing here. You can see when it keeps going to 122, 122 is keep holding. 122 keeps holding. Buyers are firm at 122. So I've seen this type of movement with Roku before. So since I've seen this type of movement before, this gave me personally a lot of confidence. Now, that's where when you guys get familiar with some stocks and you start seeing similar price action movements, similar stuff on the tape, you're able to trade it with more size, more confidence, and once again, which is what happened with Roku with me. Now, looking at the stock, this is where it gets scary, right? It gets scary here because this is a level that I don't want the stock to get below. I don't want it to get below 121. The reason I don't want it to get below 121 is because, once again, 1 minute candle, we want to wait for the candle close, is because then it would showcase that sellers are more in control. Right now, it's doing a typical Roku move. And a typical Roku move that has happened in the past, once again, it comes down a little bit, shakes people out, and then maybe continues, okay? I'm just going to fast forward this a little bit just to have things accelerated. Now you can see, seeing something like this, seeing a candle like this, seeing on the tape that this was pushed down and buyers were able to bring it up is something that I really, really, really like. Like, I like to see this, and I also want to see a green candle continue, because that shows me that weak hands have been shaken out. Strong buyers are stepping in, and they are looking to continue this move. Now, if you still have not entered, this should give you confidence, and a break above 123, a strong break above 123 should give you a nice entry point, right? That's if you have not entered. That's what you should be looking for. That's where your entry point should be kicking in. But now, if this level can break, especially this level right here where buyers stepped in, if that level breaks, I'm not really liking the play anymore. I'm not really a fan. It's looking too choppy for me. But I want to see it hold here, even if it's for 30 minutes, even if it's for an hour, and then maybe an entry above 123. That's what I would ideally like if I have not made an entry yet. Now this, once again, is where it gets scary. You guys can see it's going below 121, and now it's kind of like, hey, are these buyers going to hold, or are buyers going to step out the way, and are sellers taking control? And you guys can see sellers are stepping in, and they are being extremely aggressive. Look at that. Look at that movement. A lot of aggressive sell orders. Volume is still strong. Volume kicked in heavy on this candle. So a lot of sell orders are kicking in. A lot of aggressive selling is going on. So once again, if you haven't traded, cool. If you did enter, your exit should have been at that point. And this is just watching, once again, just simple price action. And we're just going to watch a little bit more, and I'll show you my entries and exits in a bit. Now looking back at this again, you can see falls right into our major support area, and now it's bouncing. What a lot of people do is, if they still haven't traded, they tend to buy here. Now that's not the best entry, because I think it's personally right now, just looking at this from a clean slate, it looks very, very messy, very, very choppy. Remember, we're only in 15 minutes. I would wait for this sideways action to clear up and then maybe enter on a break. But right now, if I haven't taken a position, and this is just to show you guys for other stocks that you possibly may trade, if you haven't taken a trade, I wouldn't trade chop right now. Obviously, with this stock, I did get in, I did take the trade, I did mess up, but I'm saying if you haven't traded, and now you can see continuation sell-off. Sells right into support, small pullback, continuation. 5-minute 2 showing a strong rejection. This stock being in this range is not healthy. It's also below the VWAP. VWAP is also curving down a little bit, showcasing that volume is still there on the move down. So far, not a great trade. If you have not entered, I would not be a buyer. Yes, I wish I can go back and I can make that call and adjust my trade on this, but obviously it didn't work out. Once again, I still have my 20 contracts. If I want to exit, I just sell. I just sell. I'm just selling right now just to use this feature for you guys. I'm on the on-demand, so this is not real trading. But now, just looking at this so far, what's going on. Opening again. You guys can see on the open, no clear move. Maybe an entry there. But if there was no entry there, the only solid entry point, then I don't think there should have been entry. Like me personally, I think the only solid entry point for this stock was there. I think if you did not enter there, you should have exited there if you entered. And if you didn't enter here, I don't think there should have been any entry point at all. Now what I'm going to do is I'm just going to fast forward to the full day and show you what happened on the full day of this trading day for this stock. End of the day, market is closing, right? What happened? You can see the whole day the stock did what? If you look right here, what did the stock do? Stock dumped on the open, right? This is a 5-minute chart. Stock dumped on the open. It opened up a little bit strong, made a 2-3 point move up, dumped, continued, got rejected at the daily high, and after it got rejected at the daily high, it did the same thing all over again. So throughout the day, this stock had a very, very choppy session. Okay, very, very, very choppy. No strong move up, no strong move down, just very sideways, right? Very, very sideways price action movement. You guys can see that. And you can see around here, around 10:41, 10:53 a.m., it tries to break the high of the day and gets rejected again. So obviously, didn't really show any direction. Yes, if I look at the stock now, it's very easy to say, oh, I would have done this, I would have done that, and oh, I would have maybe not traded, I would have gotten in here, exited, gotten in, exited, gotten in. Like, it's very easy to do that, guys, but what you have to understand is you have to eliminate that, because it's very different when you're actually in the play right? It's very different when you're actually in the play and you're seeing what's happening minute by minute and you're walking through each setup, each trade. And it's different when you actually go back and look at it. Now I'm going to show you my entries and exits, and I'm going to show you what actually happened with this trade so you guys have a better understanding. All right, so this day I was down. I lost about $4,700, as you guys can see. I did not make money on this trading day. Now, like I said, you guys are not going to make money each and every single day. I want you to eliminate that from your mind, that I'm going to go into the trading day. No matter how much preparation you do, you will not make money each and every single day. Sometimes you may have phenomenal trades, but the trade may not work out. Maybe it's in your control, maybe it's not in your control. Maybe it's your emotions, maybe it's not your emotions. Maybe just something happened that was completely out of your control and you're going to lose money. So you cannot control that fact. But what you can control is you can control how much money you will lose by having proper risk management, by properly exiting the trade. Now, I have had some trades where I completely didn't follow my risk management plan and everything went out the window and I messed up. Right? When I first started, those days used to happen a lot. Now they're more controlled. Like after a few months, I might have one trade or one day where instead of me having my max loss of 5,000, I might lose 20,000, I might lose 15,000, and that's because I go out of control. But majority of the times when I am wrong, and I'm wrong a lot, my losses are controlled, and they're controlled because of the one reason, and that one reason is that, hey, I'm controlling my entries, I'm controlling my exits, right? Now, looking at this right here, once again, 4,700 is what I lost. I traded Apple and I traded Roku, but I'm only going to break down the Roku trade here. Now, I had two trades for the day. I traded two stocks for the day, but if you saw my focus list, I had Facebook on it too, I had Netflix on it too, and obviously I had other stocks on it as well. But I chose to trade Apple and I chose to trade Roku for a few reasons. One, Roku I traded because I'm very, very familiar with Roku. I have traded Roku on almost every single earnings, and I think this was the only earnings where I kind of lost money. Usually on Roku, I don't really... like in the past, I haven't really lost money trading earnings. I've continuously done well. And then Apple, I'm also very familiar with the price action. I'm also very familiar with the chart, and I have done very, very well trading just Apple itself. So that's where Apple kicked in. Now, once again, negative day, 4,700. Now, with this trade, I lost about 3,700. Apple, I lost about 1,000. Okay. Trade rating a 2, maybe a 1, right? I think this was ultimately a completely bad trade. Now, if I entered where I kind of laid out to you guys, where I should have entered, the rating would have been higher, right? If I entered once again where I showcased what I would have actually done, my rating would have been higher. Now, the reason I gave it a 2 is because I had a terrible entry point. My entry point was terrible. Like, I didn't follow my rule. I added more at the wrong time. Like, I added to this position. And my exit points were also terrible, and I over traded. Like, this was a complete overtrade situation. Now, the idea with this trade that I want you to understand is one thing that really messed me up, and when I went back to it, it clicked, was the fact that I traded Roku multiple times in the past and I made money on earnings is where I was kind of like, hey, you know what? I'm going to trade it again. I've made money on earnings. I've made money when they have days like this. So I'm going to be right again. So that mindset was what made me size up. That mindset is what made me enter too early. So if you look at my first entry, I entered 16 seconds into the day. 16 seconds. The market opened and 16 seconds later, I am in the trade. That's terrible. Now, one thing I did like, even though I entered the first 16 seconds and not a fan of that at all, what I did like is I kept my contract size small. I entered at 10 contracts. Usually, when I enter, especially if it's Roku and I see confirmation, I'd maybe enter 30, maybe 50, maybe 40 contracts right away, right? Not saying on the open, but I'm saying if this was 935, 940, 950, I wouldn't enter 10 contracts. I'd maybe enter 40 or 50 contracts. So I'm kind of happy that I didn't jump in very strong on the open. I'm happy I kept it at 10. Even though not the best entry, one thing that was a plus, that my risk management concept was good. Meaning I didn't size up on a terrible entry. You know, usually what people do is they have a terrible entry point and they size up a lot. So what I kind of did is I just put my feet in the water and just checked out if it's cold, if it's hot, before I took on a bigger position. So that's one thing I didn't like about this trade. What I didn't like is 16 seconds into the open, not smart. There's no direction. There's nothing going on here. So that's the first thing that I did wrong. That's what I think I could have done better. I think I should have waited. Okay. Second thing I did wrong is around 9:32, and I'm going to show you guys the chart. I also bought shares. I bought 500 shares. Now, the reason I also bought shares is because the sizing up on options for Roku is kind of hard. And buying 500 shares equates to about, I don't know, 60 grand, 70 grand. And, you know, dumping 60, 70 grand into an option is very, very, very risky, especially if you're playing weekly expirations. So what I did here was, hey, I've traded Roku a lot in the past. Since I've traded Roku a lot in the past, I'm very confident that Roku is going to go higher. So why not buy 500 shares? Buy 500 shares, write it out. If it makes a 3-4 point move, you'll make an additional 2 grand, 3 grand, so on. So I bought 500 shares. Not a smart thing to do because once again, I think super early and entry points were not great. So already right here, this is like terrible trading. This is like risky trading. This is me crossing my fingers. And this is me also trading based on, oh man, I traded Roku a lot and I've done very well with Roku. So let me do it again. That's not trading, guys. That's terrible. Now, when we go down, you can see at 935, 935, 935, 935, I added 30 more contracts, right? I added 30 more contracts right now, right? I added 30 more contracts. Now, the issue with the 30 more contracts is I added it at a good point, but the problem that I had here, right, and it doesn't give it a bad rating. It was just the fact that after I added 30 more contracts, you guys can also see the prices I paid. I paid a relatively very similar price. The price action concept that already threw me off here is I was owning shares. I entered too early. And now when I entered 30 more, which is now 40 contracts in total, my position sizing is okay. Everything is fine. But I'm already stuck on the fact that, wow, I entered too early. But now what kind of threw me off completely with this stock at this point is now my mindset at this exact moment was, wow, I'm gonna make so much money. And at this point, I was up, I think about 6 grand on the trade. So I'm up already, right? I'm up at 937, 938. I'm up 6-7 grand. I'm up a good amount on this play. But my mindset right now is Roku is gonna go to 125. It's gonna go to 130. I'm gonna do so well. Yada yada yada. Not a great approach. Now, once that was done, right, you can see what happens. I start exiting. Exited my 500 shares at 941. 942, I exited my 125 calls. Now, what I did wrong again is I started entering the 120 calls. At 947, I entered. 950, I exited. I lost money again. I played it again, and I played it again. So I played this stock multiple times, and me playing it multiple times was because I lost money, was because I didn't accept mentally that I lost money, and it was also because I made money on this one stock so many times that I was like, wow, how can I lose money, right? Especially on this trade. If it was another trade, I would have been okay with it. So my entry points on this, I think, were terrible. I added on the wrong time. I over traded like crazy. My exit points were bad. And even giving it a 2, and I think the only reason I'm not giving it a 1 is because legitimately I'm very happy that I was still able to lose 4,700. Like I still stayed at my 5,000 max loss. So my max loss for the day was 5,000. Usually I'm like, hey, depending on when I'm trading or whenever the time is, I'm like, hey, if I lose more than 5 grand, I'm not going to trade again. So I'm actually very happy I stuck with this. Usually, and it has happened in 2 of the videos that you guys are going to see, where I've lost more than 5. I lost 10, I lost 15. And the reason with that was I didn't follow this one singular plan. Now, typically, what tends to happen is when people lose money, let's say 4,700, and it's hard for them to accept, and in this situation, it was hard for me to accept, they end up over trading, which is what I did, but position sizing gets larger to make that money back, which is what I'm happy I did not do. If I did that, which like all the signals are there for me to do, I would have maybe lost 10 or 15 trying to get this money back. So I'm happy I cut my trading off around 1021 with Roku, and I was like, I'm done. I'm not touching this. I'm down 4,700. I'm down 3,700 for this stock. Let me walk away. Now, Apple's trade, the losses came in because after I was done trading Roku, I was like, all right, forget Roku. Let's trade Apple. And the idea of trading Apple wasn't, hey, there's a play. It was, hey, let me go trade Apple. Why? Because I think I can make the money back. So I'm already in a destructive mindset, and I just kind of walked away, which is what I'm kind of happy with, that I kept it at 4K. Now, let's go through the entries on the chart. 930, 1 minute chart right here, time and sales. Let's shut that off. First entry at 930, terrible entry. Even though it went up, terrible entry. Second entry, right? 932, 500 shares. 932, I entered right here, and look at that drop, right? Terrible entry here too. Third, I added more. I added more at 935. Let's see 935. I added more right here, right? Right here. I think a better ad would have been maybe here, right? But it's okay. This ad I'm not too worried about, because even when I was going through it with you guys, I was showing you 935, 936. I liked the tape. I liked what was happening. So this ad I'm not really going to make a big issue about. This ad was fine. This would have been my first trade of the day if I didn't take this trade right here. So that's my first entry at 935. Now, when I entered at 935, and when this stock started making this huge 2-point move up, I was up a lot on my call options, right? Now, if you see at 941, which is right here, this is where I exited my first 500 shares. So my 500 shares that I owned, I exited not right at 941, because I'm like, oh man, now I'm down a lot. I'm like, let me get out. My next exit point was at 942 for all my call options. So 942 I exited, which was, I think, a pretty solid exit, but I think I should have exited everything here. So I exited right here. Now my exit point here at 942 was around 184. I exited my call options for 184. I took about a 10%, 15% hit on the overall trade. That's fine. Not the best trade, but it's okay. It happens. So at that point, you kind of move away and you're done. Now, where most of my losses came from was at 947. Let's go to 947 right here. This 947, when you guys go to 947, you can see I entered 20 contracts at 947. So I bought 20 contracts right here. Now, when you look at this, nothing makes sense. This does not make sense for you to enter here. This is a very, very, very bad trade. From my opinion, this doesn't make sense. In the moment, it made sense because I'm like, oh, Roku's at a critical level. I think it's going to reverse here. But overall, terrible trade. So I enter at 947. When I enter at 947, 3 minutes later, I sell at 259. So 947, I enter. Right here, 950, I exit. And now if you look at the entry and exit points, I entered at 334. I exited at 259. Terrible loss. That's a huge hit right there, right? Like I took a huge hit just right there. Now, that's already bad trading. Right now, it's not good trading. This was a terrible, terrible entry point. This entry point was just made because of the fact that I lost money and I didn't think Roku was going to keep dumping, right? Now, what I do again is I'm like, okay, I traded the 120 calls. I'm going to go back to trading the 125 calls. So at 1020, right? 1020, when you guys look at 1020, look where my entry is. Right at 1020. Right at the top, I enter the 125 calls. Right at the top, 120. Right? 1020, I entered at the 125 calls. I entered 20 contracts. And then if you look at it a minute later, at 1021, 1 minute later, look at that. A minute later, I exit. Right? Now, if you just look at the bigger picture, yes, if I stayed in at 1020 and I held a little bit longer, I would have made money. Yes. But this was a terrible entry point. Look how easily I got shaken out. The reason I got shaken out so easily is because I'm already down for the day. I'm already all over the place. I'm scared of losing more money. And no matter where you get to, what level you get to as a trader, you're going to have days like that. And that's okay, right? And then you can see that's where I was like, wait, I'm not That's it. That's the last straw. Like 1021, it goes down, holds, goes higher. I'm like, I'm not gonna try to chase this. And I'm not gonna lie, when I saw it was at this high, I was having an itch to enter and trigger another trade. I was like, oh, it's breaking the high. Roku shook everybody out. Enter. But like I said, I already lost close to my max amount. I couldn't afford to take on another trade, and I'm happy I followed that plan. That's the plan that kind of saved me on not losing more than my max amount. But overall, like you guys can see, terrible trading. Terrible trading, terrible entry, terrible exit, terrible re-entry again. I think this trade should have entry here, exit there. That should have been it, and I shouldn't have added stocks as well, and I shouldn't have made it more complicated. Entry and loss. If my entry was here and my exit point was here for a loss, I still would have given this a 7 or 8. Even though I lost money, I still would have given it a 7 or 8, maybe a 9, because that would have been a great trading day, even though I lost money. Right? And like I said, even though if you guys lose money, it doesn't make it a bad trading day. What makes it a bad trading day is when you have a terrible entry, you add on at the wrong time, like, buying shares, which I did right here. You buy again after you're down, and then you end up going and trading another stock for absolutely no reason. And that's what I did with Apple. I traded it for no reason this day, just so I can make up my losses with Roku. Right? And that, when I stepped back and I looked at this trade, that's exactly what I saw. I was like, wow, like my entry points were terrible. And guys, you are going to have days like this. The idea is when you have days like this, that's where journaling kicks in. That's where tracking your trade kicks in. That's where understanding each point, why you got in, why you got out, what you did, is very important. And that's where the trade rating kicks in. That's where, you rate your trade, you see what you could do better. And next time you come through that situation, you're able to look at it from a better perspective. And once again, the biggest issue with this was just simply, I've traded Roku. I think I can do a great job. And that kind of hurt me very bad. So this was my trading day for August 8th. And like I said, you guys are not going to have green days every single day. The idea is when you do have red days, track it and work on it. Even when you have green days, rate it. And, doing this for me for the past few years has helped me out tremendously. So this was once again one of the days. Now I'm going to show you more in the upcoming videos.